So hi, good afternoon again, and welcome to Cebu Landmasters Full Year Investors and Analysts Briefing. Just a few reminders before we start. Participants will be kept on mute because this is a webinar session. And for any question, you may use the Q&A chat box provided at the bottoms of your screen. All questions will be addressed during the Q&A session. The meeting will also be recorded and can be accessed from the company's website at ir@cebulandmasters.com. This afternoon, we will hear Mr. Jose Franco Soberano, CLI's Chief Operating Officer, and Mr. Grant Cheng, CLI's Chief Finance Officer. Now, I will turn you over to our COO, Mr. Jose Franco Soberano, to start with the key highlights.
Hello and good afternoon, everyone. It's our pleasure to be announcing to you our full year 2023 results. And it's really our great pleasure to be announcing not just any result, but great results to you today. It's probably my 6th year of announcing these results since we went public in 2017 and did our first full year reporting in 2018. And it's really humbling that we're managed to really show results that exhibit continued growth, and it's always our motivation for our shareholders. So some key highlights that we're showing to you on the screen now is definitely there is sustained earnings growth momentum. We grew 29% year on year on a consolidated net income basis, and while our parent grew a strong 13% to 3.58 billion from the 3.17 billion last year, in the previous year. Of course, the 3.58 parent income is our highest in our history. Two, robust top-line growth across all segments, growing 20% of our revenue year on year. It surged to 18.8 billion from 15.7 billion in 2022. Of course, I'd like to report our outstanding sales performance. Our top line is also growing higher. So we're just very happy that in spite of the higher top line, we're still able to do very good double-digit sales performance. So we grew our sales by 14%, exceeding 20 billion in reservation sales. And we're actually 93% sold out across all stages of development. So, a virtual round of applause to our sales team, our partners. So thank you very much. Another highlight that our CFO likes to talk about the last few days is our steady growth in assets, but also us, the small player from Cebu, now reaching 102 billion in assets. When we listed on the stock exchange, we were at 5 billion or 7 billion. So it's been a great ride, and we can't wait for what's next. And that's what we'll be reporting you today. We've had very good consistency and persistence in our launch of quality projects. We launched 18.7 billion in new projects last year, and these were around 4,249 units that we added to the market. Of course, even as we're building up our assets, our receivables, our contract assets, we're still managing a very healthy land bank of more than 107 hectares, including key urban sites, and these are worth over 9.7 billion pesos. Of course, Grant and I have actually been busy. We've been talking to various investors, shareholders the last few weeks because of our preferred share issuance. But of course, this is the first time we are showing our full year 2023 results. And I have the best person with me here to talk about the results of CLI. So may I now introduce to you our CFO, Grant Cheng, to talk about our financial performance. Take it away, Mr. Cheng.
Thank you, Parang Franco. So likewise, it is my pleasure and privilege to present our full year 2023 results. So I'll spend a little bit of time going through our profit and loss statement, and then a little bit about our balance sheet. And then I will attempt to contextualize and provide some details about the drivers of our performance. So just on a headline basis, our total revenues grew 20% year on year from 15.657 billion to 18.82 billion on a consolidated basis. What's really quite noteworthy is that yes, our core business of sale of real estate, in other words, our saleable projects, our house and lots, our condos, it has grown quite steadily at 20% growth year on year. You will note that as we kept saying, our hotel and leasing income will start to ramp up and will start to significantly contribute to our performance and to our operations starting 2023. And in fact, 2023 is just the beginning of it. You see a growth in our hotel revenues of 66% from 83 million last year to 139 million 2023, and 42% in a growth of leasing income. So what we're excited to show you is to show you the actual hotels and assets that are contributing to this. And we're happy to say that this is, we've only really just begun ramping up. These product segments are about to enter into a very strong, very steep growth mode because these are projects that were under construction in the past several months and are slowly coming to become operational and starting to contribute operational revenues and cash flows well to CLI as a group. And while we've grown strongly, equally important is that we have grown without sacrificing our business model. In other words, if I can call your attention to our gross profit margin, we have managed to keep our cost of sales relatively within the rate at which we grew our revenues. In fact, there's a slight improvement of it. Our gross profit margin is at 49% this year versus 47% last year. There's an improvement across all our margins, in fact, in our EBITDA margin as well as our net income margin. So our ability to drive growth and to generate value for our shareholders does not come at the expense of sacrificing our business model. At least that for us, that is a clear blessing in the market where we're in, where demand is consistently strong, where supply is continuously undersupplied. The market is continuously undersupplied. There's always the backlog of housing that we are serving into. So we know that as long as we build and design and stick true to our business model, so far we have been rewarded with very strong market reception. And later we'll provide some numbers again that show you exactly how strong our residential sales are. So moving downwards, you could see that our operating expenses grew pretty much at pace with what we expected. Our profit before tax stands at 6.194, and our consolidated net income after tax is 4.64 billion for the CLI group, and for CLI shareholders, that is 3.576 billion for CLI shareholders. So for all of you who are holding CLI shares, that means that in 2023 we just generated 1 peso and 3 centavos worth of value or of retained earnings to your shares against a weighted average outstanding shares, which really did not change. We did not issue, nor did we recall any shares. If you look at where those revenues are coming from, as I mentioned, our other business segments are coming along strongly, but really to focus on the vast majority of our business, which is sale of real estate or our saleable projects. The 18.8 billion, we break down the data into two types. The first is market segment. So you could see that our Casamira brand, or the yellow slice of the pie, continues to be one of the largest drivers, in fact, the largest driver relatively to our revenue contribution. It does show that the market for affordable housing and economic housing, we say affordable, that starts at around 2.8 million pesos, that remains to be very strong. We're quite grateful. In fact, we monitor even the regulatory environment closely. So the fact that even the VAT threshold went up to 3.6 million goes to show that there's a realization that this is the segment where we can make the most impact on the housing backlog that our government keeps talking about. So the recurring income portfolio, or the recurring income revenues, you could see it. It's still a thin slice of the pie, but it's thin only because everything else is growing. But you will see, we expect to see that, as a percentage growing, but also of course in absolute values as well. Now, if you take a look at where the revenues are coming from, it's interesting to note that Cebu, just like last year, is 43%, which is, it's no longer the majority, or the majority of our revenues are coming from outside Cebu already. And Cebu, of course, is still our number one contributor, but it goes to show that we have started to reap the fruits of geographical diversification. It shows also that we have the sustained, established ability to expand our market share in the growth areas, or in markets where we just launched our presence 2 to 3 years ago. Now, on the other thing, or the other crucial information that we want to share are reservation sales. So again, just to provide some background, I can't reiterate this enough. The slides that we've been showing you so far, and the numbers we're showing you on our profit and loss as well as revenues, are accounting audited numbers. What we're showing you here, those accounting numbers, those audited numbers, those revenues, are calculated using certain criteria. Primarily, it's the percentage of completion. Meaning, even if I book a condo sale or a house and lot sale, when we pre-sell a project, we do not recognize revenues immediately. We recognize them gradually as we build up the project using a percentage of completion. So what you're seeing on our revenues is essentially a lagging indicator, because those represent revenues from sales contracts we have signed or we have secured years ago. The one in front of your screen right now, reservation sales, this is the actual leading indicator of what our future revenues and our cash flow will be. What these numbers show is the value, or the cumulative value of sales contracts we were able to sign from our buyers in that year. So what you're seeing here is that in 2023, which is once again a record year. So it's been a record, I never get tired of saying this, but I said it was a record year in 2020, in 2021, 2022, once again 2023. We sold 20.56 billion pesos in houses, net of cancellation. So I just want to make this clear. Every housing developer, every business, when you receive an order, you're essentially a pipeline of order, there's some attrition. There's a natural attrition between the time a product is ordered and the time when the product is delivered, and that cancellation is something that we monitor very closely. Okay, so the numbers that you're seeing here are already net. That growth number shows you our net sales as of this year. And if you look at where those net sales are coming from, notice that once again, it's the Casamira brand that's driving our sales. It continues to be our best seller. If you look at the pandemic years in 2020, 2021, they proved to be quite strong. A very strong rebound in mid-market and premium segment last year. And this year, the mid-market still continues to be very strong at 36%. The premium segment also continues to be a significant contributor at 17%. But it goes to show that we actually have quite a well-balanced, diversified portfolio that caters to the market need and caters to the opportunity in front of us when we're presented with certain land bank ideas. Now, if you take a look at where these sales are coming from, they're actually coming from all over Visayas and Mindanao already. But interestingly enough, 41% of our sales last year came from Mindanao. We had very strong sales in Davao, particularly in Cagayan de Oro. 30% of those sales came from Cebu, and 23% came from Visayas ex Cebu. 7% came from Palawan. All right, next slide. Which leads me to my balance sheet. Okay. These are numbers in billions. So what we wanted to show here in terms of our, we highlighted our contract assets and real estate inventories. Um, because what we wanted to show are the assets that are close or they're closer to monetization. No? They're higher up in the balance sheet. And then you can compare that against our interest-bearing liabilities. And again, I will reiterate, the numbers you are seeing now, which is our balance sheet as of 2023, are audited numbers. And therefore, when you say contract assets and receivables, they're understated. They're understated because it doesn't reflect yet all of the receivables, all of the future receivables that we are slated to receive from contracts we have already signed. Because before we put them on our financial statement, there has to be a percentage completion. So our total, and later I'll elaborate later. We have a couple of slides later that elaborates on that, that provides more context to these numbers. Our total assets, year ending 2023, stands at 102 billion, with total liabilities of 76 billion and total equity of 26 billion. So if you look at, there's a slight improvement in our net debt to equity ratio, but as well, there is our return on equity as well as our return on assets remain to be quite steady. Here we wanted to show our debt maturity profile and our maturity towers. Again, this is just a visual representation of how we manage our debt and our principal maturity. So you could see that there we spread out our debt obligations in a way that makes it sustainable for us to service and make sure that we meet these obligations, but at the same time continue our capex. So as always, with a capital-intensive industry like Cebulan Masters, or with anyone building infrastructure like ours, building housing, you have to make sure that you balance out your capex requirements as well as your debt obligation. And here we just wanted to show the schedule at which our debt are maturing, and to show that there's not a single year that stands out as a big refinancing risk to us. That if needed, we fully expect that we can reavail certain financing facilities that are available to us in order to embark on new capex, or should the markets tighten, or should the banking sector tighten up, as we've seen. We last saw this 17 years ago during the 17 years ago during the great financial crisis. Then we should have the ability to pay this down with internally generated funds. So later I'll get back to you and provide more details and underpinning those numbers. But right now, I think I'd like to pass it back to Franco, because of course the drivers of these numbers are ultimately our business and what we've done with the real estate products that we're developing and selling. So happy to pass you back for business updates and significant milestones to my partner, Franco.
Yep. Thank you. Thank you, Grant. Always the most eloquent CFO I know, bias aside, and thank you for communicating clearly our financial results. I'd like to highlight our business performance. This is what I mentioned, that our land bank has grown steadily, while you see the great turnaround in new launches as well. Our new presence here is in General Santos and Butuan. Actually, as of tomorrow, we're going to launch our Butuan project. I heard that this might be another sold out project in a few weeks, hopefully. And in General Santos, we hope to launch that also in the coming months. And as we announced, we are looking at a first project in Lzon in the very near future, with an acquisition in Naga City, Camarines Sur. Next slide. So you can see here that since the pandemic days, we've been spending more capex every year. And last year, we spent a total of 12.89 billion. These were mainly concentrated in residential development, 81% in residential development. Also 12.1% in investment property. This includes our hotel developments, our office developments and retail developments, and 6% in land acquisition. So you can see CLI as your company really investing capex where value is created. You can see there that we don't let our money sit around. We really reinvest it to create more value for our shareholders and stakeholders. Next slide. I'm glad my team updated our photos of projects here. So thank you, Clarissa and team. We do have a lot of beautiful projects we recently completed. So you see our Casamira Bacolod here. And some accents looking like the sugar cane. You can see our award-winning Latitude Corporate Center above the office segment. You can see our baseline complex featuring one of the largest murals in the country with our live Cebu City mural. And you can see a picture there of our Davao Global Township main avenue. And we now comprise a total of 90 residential projects, 6 offices, 10 hotels, 10 mixed-use projects, and 3 estates. So in terms of real estate sales, we were able to report that in our books, in our full year 23 performance, we grew 20%, no? 8 to 18.5 billion. And we are 93% sold out across all stages. And we launched 18.7 billion in new projects. Next slide. This is a slide we like to keep track of, and we show this to you quarterly. And look at how, look at the confidence this gives me, as a chief operating officer or as a leader of a growing organization. When we have projects that are completed at 97% sold, projects that are ongoing at 96% sold, projects that I've launched in the last 1 year alone at 63% sold. This really gives us confidence that we are on the right track, that we need to really expand our footprint, not just in the region, but also gave us the confidence to go to Lzon. And because we are really specialized in the right segments there, and this really is the one propelling us to grow our residential portfolio. Next slide. Okay. So this is our footprint of completed projects. You can see here it's spread all over the Visayas and Mindanao region. We don't mention it a lot, but one big source of pride of CLI is our property management operation. We do operate and manage all these completed residential projects. So we have 45 completed. We're 45 out of 45 we're still managing used through our subsidiary. We like to make sure our customers are well protected. They're happy in their CLI branded developments. We are here to stay. That's always the theme we communicate to our people. Hey, we are here to stay.
Yeah,
And,
I'll just add
you
some-
added, yeah.
Yeah, very quickly.
Yeah.
I also am proud of that. I always mention this because remember that being the property management of our turnover projects is always earned because the homeowners association, the condominium corporation are essentially formed of independent members already who bought us. And so I know if you've been followed, for those of you who follow the real estate industry or are familiar with it, the homeowners associations will always have a choice if they want to retain or who they want their property manager to be. So I think it speaks volumes to how we build and how we maintain our relationships with our buyers that we're 45 out of 45. If it's a project we build, our homeowners choose us to continue and continue to pay us the management fee.
Because as you know, the best governance of a home builder is you have to turn over the project to the residents, which we do. And in spite of the turnover to the residents, they still value our presence there. It's never a perfect, perfect operation, but I think we always adjust and improve, and that's why we're still there. So next slide, please. Thank you, Grant. So construction in progress is where we are very excited about this year because we're delivering so many units, and that means I'm providing a lot of cash flow to Mr. Cheng and his team. So we have several projects completing this year, including one Astra Place, Casamira Homes Dumaguete. These are actual photos, by the way. Casamira Ormoc, Belmiro Heights, CDO in the Teakwood area in Agusan, very beautiful project, and one Paragon Place. You can see the sold out status there, 100% sold and 90 plus for most. And so our job is to deliver this on time or with the highest quality, and then we turn around on the projects. As you can see here, with a high inflationary environment, even with a higher interest rate environment last year, look at how we've kept our sales at 96% now. Next slide. So this is our new launches. No, as I said, these are in the last 6 to 12 months, and among many milestones. So you have Casimir Homes Davao. We sold 85% in 3 weeks. It's now 95% sold. Mindara now promptly sold out 2.5 billion in less than a week. This is in our LPU town Davao. Merani Steps Danao was our way of innovating. Now we created walk-up type units near emerging urban centers or cities like Danao. Casamira Palawan, though it's part of Lzon, we feel like it's the same latitude as Vismin, but amazingly 62% sold. No, our Tower 4, and we have Casamira Towers Bacolod, Panglao, all at healthy sales levels in this part of the region. Next slide. Okay, so quickly about our growing recurring income portfolio, our investment property portfolio. You can see some positive results here, 42% growth in revenue from leasing. And we do have over 35,000 in leasable area, and we're seeing this grow to 110,000 in the next 5 years. Next slide. So you can see here a steady growth of our leasing portfolio, and we're very selective when it comes to our tenants. We are very supportive as a landlord, as a developer. I do feel very excited about the growth of this portfolio and the increased contribution of this business to our books. No? We know that post IPO, this was a strong, I would say, this was a strong program for us. We needed to grow our recurring income portfolio, and we're now seeing this come online. Next slide. You can see some of our new tenants here with drive-thrus in our Davao Township, in our co-living dorm. It's 70% lease. Our new wing of our Baseline Center mall, our high-end development, 38 Park Avenue, has fully leased out its prime retail spaces. So most of our retail spaces are in the podium levels of our residential projects and mixed-use projects. Next slide. Of course, another very important product is our growing hospitality portfolio. We have completed 180 rooms, and our revenue growth is 66% last year. Of course, in the last few months, we did open 2 more hotels with Life Cebu City, and we opened as well the Pad in Cebu City. Next slide. So actually, as of today, our hotel portfolio is at 797 rooms here. Sorry, it's 338 with Sitting Cebu Life and the Pad, no? Just to make sure of it. And it will grow to 797 keys operating this year. So you can see actual photos of projects. I'm actually flying to Bacolod tomorrow to test out our new hotel there. We're on a trial period. We do hope there are some people tuning in from Bacolod. It's your best looking hotel, bias aside, and it's even better looking in the interior of the property. So I'll be seeing you there. And you can see our other projects under development, the very high-end Abaca Resort Mactan, Sofitel, including other quality brands like Mercure Cebu, Cities Davao, and Radisson Red in Astra Cebu, all opening soon as well. Next slide. You can see here, we opened 78 rooms of the Pad, our very first co-living brand, doing very well actually, because it's located very prominently in Banilad, and you have the Life Cebu City that opened 80 rooms. We had a very nice opening ceremony last December. Thank you. So moving now to our mixed-use and township projects. Yes, we are now capitalizing or creating value out of these townships. No? Next slide, please. Thank you again to my Corfin team for showing these nice photos. No? We we sometimes forget to showcase.
Oh,
No, so this is how beautiful the township is. Our first major township. No stone was left unturned. All the highest specifications, green initiatives here. So we now are developing our first retail concepts here. Some drive-throughs are being constructed now, like Seattle's Best and McDonald's, and we've had so many events here, from car shows to bazaars, Christmas concerts, because of the well-planned and developed township here. Please do drop by here in Davao. Slide. And moving on to significant milestones before I ask Grant to close our full year report. We're very honored that the market continues to embrace us, and it's reflected in our market leadership with 22.8% of the market, done independently by Colliers. Thank you for that, our shareholders and customers. Thank you. And of course, our team. Next slide. Oh, this is a very special milestone for our company, and very special even for our ExCom, no, which comprises our CEO, Joe, myself, Grant. For us to be selected by NTI UD Asia as their entry point into the Philippines is a big honor. They chose Cebu over the various opportunities in Manila. But I really feel they chose CLI, our good governance, track record, our culture. And NTI UD, of course, is a subsidiary of NTT Telecom, the third largest company by market capitalization in Japan. This is how big our partner is, and their real estate arm, NTT UD, is present in the US, UK, Australia. But in Southeast Asia, they're only in 2 countries, Vietnam and the Philippines. In the Philippines, they're only in Cebu with Cebu Landmaster. So we're in the process now of developing our first 2 residential towers in the heart of Cebu IT Park. You can see here our whole management team was with the management team of NTT UD with their CEO, who visited us a few months ago. So we're very honored. I'm not sure if they're also listening to the report, but arigato gozaimasu again to the NTT UD Asia team. We're really excited to be working with you. Next slide. So this is of course, last year was us celebrating 20 years of masterful development, but I would say 20 years of us just really working hard, and everything else followed. No? So from 1 subdivision to 119 projects in 2023, from 2 employees to 900 strong CLI employees, and from, I would assume, 0% market share to 23%. Searching. So we're very honored. Thank you very much on behalf of our 900 strong team. Next slide. And growing shareholder value. Grant, you want to take this, or you want me to take this?
Go ahead.
Okay.
And then I'll contextualize.
Yeah, so
I'll add to this.
So I do form part of our investor relations team, providing backup to Grant's team. But we're very proud that we declared just 2 days ago regular cash dividends of 15 pesos per share and special cash dividends of 3 cents per share. No? So combined 18 centavos per share that we declared. But you can see here naman what our real value is. I do feel we're still undervalued in the market, but we've had now 7 years of consistent results, 7 years of creating great shareholder value. You can see our book value per share as of last year is 4.75, and our stock price is 2.85. I mean, the numbers speak for itself. Our performance speaks for itself, and we do hope our analysts here can continue to talk about CLI and the growth we've had, the consistency we've had, and the potential we have. No? So you can see here our results. Our market capitalization is at 9.88 billion, but we do have assets over 102 billion, and I guess approaching 30 billion in equity. Price to book of 0.60 times. Price to earnings of 2.77 times. Grant, anything you want to emphasize?
The one thing I do want to emphasize is that these dividends that we paid in cash and we paid it consistently every week is a direct result of our business model, meaning that because most of our projects are saleable projects, right? We base our decisions on the dividends based on the collections that we have had in the past years. One way to think about how a company like CLI, or how the mentality of the executives and the board when we declare a dividend, is we actually look at the complete cash cycle of our projects. And once a project is closed out, meaning a project, if you recall, as the rate at which we're selling out our residents. So imagine one of our resident buildings, it's already 100% sold out. Then it's only right that we give dividends, or we start returning capital to our shareholders based on that completed building. And the decision to capitalize and to have capex for another building is a separate independent decision when we raise capital, or when we start putting together capital. Now, of course, the way we do it is we also look at our retained earnings and collections in order to build up the capital that we need for the next round of capex. But really, these dividends represent a fraction of the collections, the net collections we have had from projects that we launched several years ago. So it's useful to think about the cash conversion cycle and the way our business model is put together. Because given that it's majority sales and condominiums and houses and lots, that is the source of which we're declaring this.
Yeah, and we're looking at this year as a banner year. So um, we will continue to communicate with you, our shareholders, analysts, no, on the progress we'll have this year. But we do feel that this is a reason to celebrate also, no, our 2023 year. But to never rest on our laurels, no? I mean, that's our attitude always. So congratulations to our shareholders for this as well. So this is a segue to Grant's 2024 outlook. So hope you were able to appreciate our updates and significant milestones. So thanks again. And Grant, please go
Thank
ahead.
you. So 2024 is going to be more of the same things that has worked for us and that has delivered a lot of value to our shareholders and to our stakeholders. That means everyone that believes in CLI, everyone that's involved in CLI, from our shareholders to our banks, to our suppliers, contractors, our buyers, our employees, our business partners, and JV partners. We will continue to launch projects. We're looking at 27.6 billion pesos in project launches. Environment permitting, meaning, as long as our regulators and our government agencies, as well as all the other prerequisites that come for launching a project, come on time. And we will allocate 14.5 billion pesos in capital expenditure, mostly for project development. Notice it's 83%, and then the rest for land acquisition, meaning that the bulk majority of the capital we are raising, whether debt or equity, or from retained earnings from previous projects, really goes into ongoing projects. So the message here is we're not deviating from our business model. We know what works for us. We know what we're good at, and we're going to put our capital there to make it grow. Our leasing portfolio is going to grow to 48,590 square meters, additional GLA from new properties being opened up and new leases being signed up. So as Franco mentioned, we've got large national names like Dean and DeLuca, McDonald's, Seattle's Best already becoming our tenants. And we're relatively new at this, but we look forward to be a much more well-rounded developer, where these developments, these recurring income assets, whether it's leasing or hospitality, will be able to provide a lot of synergy and a lot of mutual value to each other. Okay, and of course, the other pillar of our recurring income is hospitality. So this will go up to 459 keys with 3 new hospitality projects. So one in Cebu, one in Bacolod, and 2 in Cebu and 1 in Bacolod. And this brings our the number of operating hotels to 4, and we have 6 more in the pipeline. So all the rest, you could see that we're heavily committed to the hospitality sector. We are a big believer in it, and it will come to fruition. This is a key number. This is a key number that we are highlighting. I do believe this is the first time we're going to share this to the public, but just to provide some context, the 13 billion is the amount of receivables or the amount of collections we are scheduled to get in the next 12 to 15 months, I would say, from completed projects with signed sales contracts. Okay. So not to get too much into the weeds or details of it, but this is really the collectibles from those finished housing units that we are about to deliver that has been reserved and sold with a signed contract to sell with our buyers. And with all of this being said, you can continue to expect a continued growth in our financial performance into 2020. And so how do we achieve that? These are our pipeline projects. So Franco was saying that we look forward. We're going to launch Butuan before Holy Week. If market response is any indication, this is like the Era Store Butuan style. Sorry for the exaggeration, but it's true. We do get a very strong market reception whenever we go to new regions and new cities and we launch our Casamira project. But aside from that, there are a couple more, or many more projects all over Visayas and Mindanao. So in Cebu, in Cagayan de Oro, in Davao, right? We're so excited with these projects. The Manresa condominium in the township that we are
Yes, I
collaborating
believe
with.
this is one of the
Saver-
first times we're showing this perspective, but it's just a
Oh.
little preview.
It's a little
It's
preview.
mimicking the mountains, so very green, very respectful of the environment.
Right.
And then you have the West Village in Davao Global Township, more premium design there. So you can see us evolving, in our offerings,
Right.
and it makes
So
me
I think
excited.
what's notable here, you could see that a lot of our project launches are phase 2 or phase 4, Tower 5. And the reason why these are is again, it's building on successful business models already. So let's say we've had a handful of successful projects in Cagayan de Oro. It makes sense for us to to build on that growth and to replicate what has worked for us. And now, actually, this is also something that we're showing. You remember earlier on when I showed you our balance sheet and our profit and loss statement, we were showing contract assets and receivables of about 47 billion. And I said that was understated because those numbers are computed on a percentage of completion basis. But what we wanted to show to the public, if you just counted the peso value, the remaining peso value that we can collect from our sales contract as of today, what would that number be? Okay, at the end of 2023, it is 77.7 billion. So again, I want to reiterate, these are not projections and these are not estimates. This is the calculated aggregate value of our sales contracts that we have yet to collect from our buyers. In other words, this is our order book. We build it, then we will collect this. This year, we have completed several projects that will allow us to collect over 13.6 billion pesos in collectibles. Now, it may not all happen in calendar year 2024. Some of the buyers may be taking their time, maybe abroad, or some of the units may take a little bit more time to finish. But all it goes to show is that this is our actual pipeline of receivables. And there's still so much more upside with unsold units. If you recall the rate at which we're selling out, so now we have over 117 projects but of those 117 projects, 91 are saleable residential projects. Now, most of them are sold out, but the 1, 2, 3, the handful of units left per project, those could still be a source of liquidity for us as we do essentially RFO sales or ready for occupancy types of sales. Okay. Next slide, please. Now, for most of you might be aware that we're already launching, or we are now in the public offer period of our preferred shares. This is our maiden preferred shares. We plan to raise as much as 5 billion pesos, but that's maximum really. We've already raised what we needed from this issue one. The 5 billion is the maximum depending on what the market is, how many more buyers might want to come in, but we already got what we needed when we launched this offer. So I did want to thank our partners, our underwriters, our issue managers here. And if you feel that what the numbers that you see here today are are attractive. We do believe that CLI is offering right now quite a compelling investment instrument for your consideration. But it is something that we could tell you that the funds that we are raising here will go to essentially building the projects that you saw in the pipeline. Mr. Chris Laran, I see you're raising your hand. Maybe I'll acknowledge that later during our Q&A. But on that note, I would like to reiterate that for any one of you, if you have questions, I encourage you to put it in our Q&A box. We actually look forward to this interactive portion of our analyst briefing, and we'll tackle them one by one. But then, if just for good order's sake, may I encourage you to please type down your question so that we could see it and then go through it one by one when we get there. Now, all of this through our development and our growth, we try not to forget that we have an underlying responsibility not only to our shareholders to drive economic value and create value for them, but also on other metrics, on the environment, on our society, as well as good corporate governance, or ESG. And I invite you to look at our annual report. They're on our website. We're about to come out with our full year 2023 annual report with sustainability reports in the next couple of weeks. And the numbers we are showing you, we will upload the finalized signed audited financial statements as and when they become available from our auditors. And it will be available on our investor relations website. So thank you very much to all our participants. I appreciate your time. We appreciate your time in following and keeping an interest in CLI. So now we look forward to answering and engaging you with some of the questions that you might have in the queue. So I see 3 in the queue. Clary, could you facilitate that na lang?
For the first question, this is from Michael Hilado. I think this is for Sir Franco. What challenges did the company experience in 2023?
What challenges? Well, in real estate, it's there are challenges daily. But I guess what makes a developer great is the organization. No? It's this organization, systems, culture. No, and I'm just glad that in CLI we have not been complacent there. No, we've invested in people. We've invested in process improvements. We've invested in professionalism, and that's why these challenges, though they come daily, are addressed. I think that's sometimes what is not highlighted more. But I would say, of course, challenges were common across all players, like higher interest rates. So you could see in our books that interest rates our interest expense grew because obviously from 4% now paying 7 to 8%. But the good thing about what we do, we're in a real estate selling business, and we're able to manage our margins by also adjusting prices of our units higher or controlling costs. And that's why you see us still performing at 50% gross profit, which reflects in our results. So I would say in spite of that, growing sales 20%, growing net income double digit is a reflection of how we've managed to overcome the challenges. But I would say in terms of lacking labor in the BizMin, I would say none. No issues for us, maybe because we're a good payer and good contract developer. We've never encountered the issues. It's more of contractors and suppliers lining up to us, wanting our business. In terms of the pandemic-related delays, that's already resolved in 2022. So we've managed to catch up aggressively last year. So I would say the challenge now is really looking forward to 2024, maintaining a good trajectory, in spite of our higher top line. But still, how do we overcome this? Organization or people. I believe some are tuning in. Continuous improvements in processes, championing digitalization. We are strengthening that part, and still being very transparent to the market. That's why I believe our preferred share issuance is getting very warm reception because they see our sincerity in reinvesting this to create good value. So that's a short answer. I might continue my answer for the next 10 minutes. So that's it, Gar.
Thank you, Sir Frank. For the next question, this is for Sir Grant, funding related.
Yeah.
Do you utilize CDS facilities?
Mhm.
And maybe we could also answer
The second
why
one.
did we choose
Preferred.
shares?
Yeah. Actually, the answer to both, maybe not surprisingly, is kind of in the same vein. Yes, we do use CTS financing facilities, so that answers that question because they're among several diversified funding sources that we have at our disposal. So obviously, in a business model like ours, we have several assets, valuable assets that we could use in order to generate or in order to source funding. So whether it's a project development loan bilateral with the bank, whether it's CTS financing, we also tap the capital markets when we did the IPO, when we did our maiden retail bond 1.5 years ago, and now we're doing preferred shares. We also did private debt and corporate notes. So these are all just for us diversified funding sources. And having a broad and a diversified funding source allows us it's prudent risk management so that we are not completely dependent on one source of fund and exposes us to refinancing risk, liquidity risk, and any other such financial risk because we need patient capital. We need capital that will stick with us for, let's say, a housing project at least 5 years. Capital that will not demand its money back for 12 years for, let's say, for a hotel project. So these are, you have to mix and match and you have to find the characteristics of capital that matches your business model and your cash conversion cycle. Now, why do we choose preferred shares? Now, preferred shares are a hybrid between, I would say, between equity and debt. And it's that kind of hybrid properties that we thought could work very well in our capital structure, like in our balance sheet. So it does give us another source of another funding source out in the capital markets. We had an opportunity to do so. So against a backdrop of an annual capex of over 14 billion at this point. Really, the amount we're raising that's good for 4 years and 7 years, at least on its non-callability part, is really a fraction of what we will need going forward. But again, it does demonstrate for us, and it allows us to establish. Having opened these doors, we can come back to tap it. We know how to tap it. There's some familiarity in us, not only in us in terms of executing this transaction, but also in allowing us to be a familiar name, a familiar issuer to institutional and retail investors who might be interested in this type of instrument. So again, these are all different funding sources, and that has its own characteristics and its own profile and its own investor base and risk appetite. So that's why we're going for these types of instruments. Hope that answers your question.
Thank you for that, Sir Grant. Actually, I also received a question from the chat, sir.
Cool.
We can discuss more about the preferred shares, like the use of proceeds.
Okay. The use of proceeds of our preferred shares are listed in detail in our prospectus, but I could tell you that we outlined the use of proceeds. They're going to go to, for example, the project that we're launching in Butuan this week, Casamira Homes in Butuan. We are allocating a good amount from these preferred shares to Mirani Steps that's in Danao in northern Cebu. That's that's a project that we launched and is significantly sold out. And we're also going to allocate a good amount, over 700 million, to Velmiro Heights in Consolacion. That's also in North Cebu, and that one is substantially sold out. So again, these are projects where our customer base, the market has responded to very positively. So it is really the most, in a way, a boring answer I could give you. What are you going to use the proceeds for? To build houses. In fact, houses that we already sold. So that is the main use of our proceeds.
Thank you for that, Sir Jan. For the next question, this is for Sir Franco from Chris Larano.
Yeah.
Could you give us more details of the Lzon project and which other Lzon locations are you targeting?
Yes. Thank you, Chris. And I saw you raising your hand also virtually earlier. For Luzon, we cannot fully disclose yet because we are still finalizing certain sites. But the most certain one is our project in Naga City in Camarines Sur. We do hope to develop an initial 2,000 houses there. We feel that Naga City provides very good value for money. No, we grew by looking at value for money. No, so projects that have very good cost benefit, no, type of offerings. No, so that we can offer a very affordable price, but give them good price appreciation, amenities, good finishing, and we saw that market. It will be refreshing, no, for Luzon market to have our kind of economic housing there. We're also looking at sites in Laguna, Cavite, even Metro Manila. No, we have been scouting for the last few months, to be quite exact, and definitely by the first quarterly briefing of the year, no, 2024, that will be towards the end of April. We will get back to you guys on more information about our Luzon expansion.
Thank you for that, Chair. We have another question here from Rastin Mercado, our friend from China Bank.
Okay.
So he noticed that our GPs for the fourth quarter 2023 remained strong, around 50%. And then this was actually sustained quarter on quarter. And what's driving this? And is this something that you're poised to sustain? That's his first question.
Yeah, I'll take this one. In fact, it's connected to an earlier question, like what were the challenges of CLI, the business. One challenge was that our margins were under pressure from two main sources. One is the increased cost of capital, which is essentially increased cost of debt. And the other one are increased input costs, so steel and cement, with the inflationary measures, especially the Philippines being in an imported inflation environment. But I think what we were able to do to respond to this is you need to have a very dynamic and agile pricing strategy as well. Meaning that while we don't adjust our prices as fast nor as frequently as, let's say, department stores or gas stations, or restaurants, we do have a very deliberate strategy. And we have a very strong internal analysis and internal process by which when we see that halfway through our project, or not just halfway, but every month when we review a project's financials, we actually have a project budget monitoring system on a per project basis that gives us visibility on the trajectory of both the cost and the GPM. So we already have a good sense what we might need to do for a project in order to protect its GPM, even before we finish a project. Of course, when a project is finished, it's too late to do anything on the cost side. And especially if it's fully sold, it's too late to do anything on the revenue side. You're locked in, essentially. And in fact, the worst thing is you could be at the mercy of price fluctuation at cost while you're locked in at revenues. But what we've been able to do is have this dynamic process where we look at which projects are threatening or to exceed their budget on one area or another, and we've been able to respond with more resolute price and product adjustments over the course of time that the market can still absorb. But it's not just increasing prices; it's also about being able to proactively do value engineering and look at where cost savings might be driven for future expenditures of the project. So there are some tough decisions that may need to be made, but nevertheless, decisions that need to be made if you're going to choose how to protect your margin. So that's I know it's a broad answer, but it's without getting into too much details about our process, it really is the work that the team just puts in to monitor every single project using our system.
So I'll answer the next two.
Yeah, sure.
Right? Yeah. For leasing and hotels, how are occupancy rates trending? I believe we mirror the industry. Hospitality occupancy is growing strong in the 70+%, while our retail and offices are trending on the close to 70, high 70s to 80% now, depending on the project. I do believe that we're still in that environment where work from home or face to face, no. But the good thing is we've seen occupancy improving, no, in 2023 versus 2022. I guess this is where CLI is a bit, I would use the word inelastic, no? I mean, it's not yet our big contributor, no, office market. So, but the good thing is our new inventory is coming online in the coming months, no, when the market is recovering, and I think that will fare well for our results. And you have target guidance on reservation sales. So I don't think we have a firm number, but of course we're looking at the double-digit growth in reservation sales. You saw we have 27 billion of new launches plus sales from existing projects. I am quite confident. No? I'll throw the challenge to my sales team with Ms. Rose Yulo and her team, and we're confident always with that team.
Thank you, sir. I think this next question can really help with our sales for this year. So last January 1, 2024, BIR has adjusted the VAT exempt threshold for real estate from 3.199 to 3.6. Can the market expect a lot of upside from this development? And can you provide the percentage increase in the GPM that we have already forecasted?
Well, I would say even economic housing now, yeah. So anything below 3.6, no, or in the 2 to 3 million range is economic. To be modesty aside, no, VAT threshold or none, I feel our products will be sellable. No, I believe we're gonna do our best to price within the VAT, but even if it's VATable, no, we'll make sure that we are very innovative with our down payment schemes, timing, such that the buyers will be able to prepare, no, for their home ownership. So definitely, it's a very good move by our government because it really gives breathing room, no, breathing room to our buyers, especially in the economic segment. So, but still, no, VAT or non-VAT, you still see that housing supply. Now I think as a country, we launched 100,000 to 200,000 units, no, versus a backlog that's at 7 million to 8 million. So I think VAT or non-VAT, there is still a big lack of supply, and I believe buyers are smart to choose good developers that are reliable, that have a good track record, and that's what we're targeting.
I'll add to that also because and I think the question about the VAT exempt threshold, about its impact on
our results. Yeah, go ahead. Yeah.
That's honestly, the impact is not so much
yeah.
Remember that just to be a little technical here, but I do believe the question deserves that the detail. If a sale is VAT exempt,
to pay that,
right? Then we don't charge VAT. There's no output VAT for us to remit to the BIR. But it also means that the cost that we are spending in order to build that product. So in this case, acquiring the land, buying the steel and the cement, all the furnitures and fixtures, the painting, architectural finishes, the doorknobs to the tiles, all of the VAT from the costs going into that product are also non-claimable, and therefore this is what you call a disallowed input VAT expense. So firstly, you don't necessarily get to keep the whole thing, but you apply your margins to it. Second, this is only effective January 1, or at least that was the effectivity date on the implementing rules and regulation, which means that all of the reservation sales that you have seen so far in 2023 are not affected by this. In fact, all our sales made prior to January 1, 2024 are still under the 3.199 scheme. So you might see some impact on this going forward, starting in probably 2025, 2026, from residential sales we are making today. And then when you start having POC or percentage of completion and collection threshold criteria being met on these 2024 sales, then you might see some of the positive upside from these sales that have newly qualified for VAT exemption. But then once you factor in that, hey, okay, you're going to get extra revenues, but then you're also going to get extra costs because you no longer are able to claim the input, but the and it's only going to be a portion. The marginal difference is how many houses of us are we selling between 3.2 and 3.6 million? Yun lang naman, di ba, na kung it's above 3.6 the whole time, it was always battable. So that marginal difference plus you put in the cost, and it's not for all the product, I don't expect it to be a very big difference, but a difference nonetheless and a positive difference.
So Clark, it's good because it's our full year 2020. We're very happy that there are a lot of questions, and we're happy to continue addressing the questions. Go ahead.
Another question here, sir, is given how would the revenue mix be in the next 3 years, and what other segments of the real estate market are you looking at?
Yeah, thank you for that. So as we reported, we'll be over 100,000 square meters in net leasable area in the next 3 years. So we do hope that our recurring and we'll have in the next 3 years we'll have we'll have the 1,700 hotel rooms online. So we do hope that at least 5% of our recurring income will be finally contributing to top line revenue or more, no, but at least 5%. Is that correct, Clark?
Yes, sir.
No? And that's really healthy, no? Good cash flow that will be coming in to the business. Why 5%? Because our real estate sales are just so dynamic, not so robust, and we hope that will continue. And eventually, we feel that on a longer term or on a medium term, that recurring income will go above 10%. Is the goal. What other segments of real estate market are you looking at? Well, the big segment is the biggest island, Luzon. I feel that that's a new territory for us. It's going to be a big investment and focus of the company. So we're very excited about that. And to create our presence there would be a big segment. But in terms of industrial warehousing, we're not looking at that. We look at that as lower yields. So we're not so excited about that. So it's really continuing our residential, office, hospitality, mixed use, and township offering. So maybe we're looking at another big township in the near future as well.
Sure. This one is for Sir Grant from Erwin Miranda. What would you say are the key contributors why CLI can price its real estate competitively while still achieving almost 50% GPM and all good net income margin and EBITDA?
Well, compared to other developers, well, for one, land is cheaper. So that's already an inherent advantage. And so because a big portion of your costs, you already have that advantage here, then that's for me really one of our biggest contributors, how we're able to maintain gross profit margins. At the same time, by starting to scale up our operations, and you're starting to see booming economies in Visayas and Mindanao, Cebu and Davao, you're starting to see the real estate economy start to have critical mass and critical scale vertically. No, so I'm talking about cement factories putting up their infrastructure in and around Cebu, the Cebu province. I'm talking about steel mills starting to come up in Carmen, right? I believe there's a new steel mill there. So once you have critical mass and you have Compostela, you have certain size, then it feeds on itself, and there's a certain momentum by which you can keep your prices down. Now, of course, we ride the wave, and we try to make sure that we execute our business model while conditions are favorable like this. But we do, that's our main driver there.
Thank you, sir. Maybe one last question before we end.
Yeah.
So they're very interested on the selection process of NTT. How did CLI and NTT came about?
Yeah, I probably can talk about, I believe, what is publicly disclosed already with a little more flavor to it. But NTT has actually been looking at the Philippines for the last 10 years, no? Because they look at it globally. They do have a lot of trophy or prime assets, grade A assets in New York, Boston. They do have in Houston as well. somewhere in Texas, Australia, please look them up and check out there. But I believe it's also them looking for the right partner. No, as you know, CLI has a lot of very successful joint ventures, and that is one track record that is hard to find. No, I mean, to have successfully completed several joint ventures and returned and given a good return to landowner partners is always very special. So they were doing, of course, their due diligence, looking at. But I really was very impressed with their process. Very thorough, very meticulous. And it's probably a 2 year, it's less than 2 year review process. And I'm just happy that they're here investing not just in CLI or Cebu, but the Philippines. It's foreign investment that will help our country, help generate labor. But of course, we're happy they chose CLI. No, so thank you for that question.
I think that's it. If they have any more questions, they can always reach out to us and email maybe to ir@cebulandmasters.
Okay, so once again, to our analysts here, to our shareholders, to our various supporters, we'd like to thank you for tuning in. It's really our honor to be reporting good news to you. We hope to see you in a few months. Grant and I and Chairman Joe Sobrano plan to be in Manila for our next briefing, so we hope to see you there. And Grant will pay the bill of that briefing. So congratulations to my team at Cebuland Masters. So thank you very much, and have a prayerful whole week ahead. So thank you very much, everyone.
Thanks, everyone, guys. That was
Wala na,
that was really cool.